And in our international news, the International Monetary Fund is ready to provide Greece with more aid if the country asks for it. That's what the fund's European Department Director Antonio Borges said on Thursday. The Washington-based fund's views about Greece are being closely watched ahead of next month's all-important decision on whether Athens receives the next €12 billion tranche of its EU IMF bailout. Ireland and Greece are already dependent on €52.5 billion of IMF aid, while Portugal is awaiting a €26 billion three-year lifeline from the fund. Borges added that the IMF believed that Greece was not bankrupt despite its high debt. Asked whether there could be a new aid package for Greece to help it work through its fiscal reform program, Borges said the IMF was open to the possibility.
At this point, on the basis of our program, we think that Greece should be moving in the right direction to a position where its debt is sustainable. In those circumstances, there is no need for any debt restructuring. That's number one. Number two, of course, we can always revise our position depending on how the program is progressing. But we have just reviewed the program 2 months ago and gave it a positive review. We now have, as you know very well, have a mission on the ground that's preparing the next review. As long as reviews are positive, we don't see a reason to change our position.
German Chancellor Angela Merkel signaled her backing for Mario Draghi as the next president of the European Central Bank, removing the final obstacle to the Italian's appointment to Europe's top monetary post. Merkel's approval makes it more than likely that the 63-year-old, currently governor of the Bank of Italy, will be appointed head of the ECB soon, as Jean-Claude Trichet's term ends in November. Draghi will inherit an ECB that's almost unrecognizable from the one Trichet took charge of 8 years ago. The bank's balance sheet has more than doubled to €1.9 trillion, mostly as a result of the extraordinary measures it had to battle the global financial crisis and Europe's sovereign debt crisis. Commodity prices tumbled once more today as a strong dollar flexed its muscles. The greenback has gathered strength recently as investors worry about Europe's lingering debt crisis. There were new signs the situation in Greece won't be resolved quietly. Protests once again turned violent in the streets of Athens as unions displayed outrage over public spending cuts. But the sell-off in oil wasn't just because investors shifted their funds towards the safe haven dollar. Buying also had a demand component to it. U.S. government supply data show high gasoline prices are causing Americans to cut back on how many times they fill up. Crude oil prices dropped more than $5 to trade below $100 a barrel. India holds an advantage over China in terms of population demographics, but question remains as to whether India can successfully integrate its younger population into the economy. 2 out of 3 women work in China, only 1 in 3 does in India, giving China an edge in its labor force. However, India's population grew 3 times faster than China's did in the past 10 years, while China has fewer children and an aging population. Economists believe this will give the country the edge over China in the years to come.
Along with Africa, India is going to be the key, supplier of, or marginal supplier of labour to the global economy over really the next 10 to 20 years.
But questions remain over whether India can successfully integrate its younger population into its growing economy. While it is adding nearly 13 million people a year to its population, it can only train around 3 million. The solution, some economists say, are reforms to India's outdated employment rules. Because if India fails to reform its economy, it not only risks growth, but it means the country could play second fiddle to China for years to come.
Labour market reforms that enable manufacturers in particular to hire and fire workers relatively freely would, I think, be quite crucial to enable India to fully exploit the benefits of its huge and growing workforce.
Before we head back to news, let's take a quick look at the Asian equity, commodity and the currency markets, and after that, Mona Nasser is back with the news.